Good morning, everyone. My name is Prasad Padmanaban, CEO of AICB, and welcome to this joint webcast between AICB and PwC Malaysia on regulation and governance in digital banking. This is the third of a five-part series on digital banking with PwC under the AICB's Empowering Bankers webinar conversations. Thank you for joining us today, and we hope you will continue to participate in our webinar series as we do our best to bring greater online sharing and knowledge to our members during these challenging times. A few housekeeping details to follow before we start. The microphones of all the participants are automatically muted to minimize disruption to the session. This webinar is also an interactive session, so if you have any questions, please submit your questions online by clicking the Q&A tab below. Please do introduce yourself by stating your name and the organization you represent. We will do our best to try and answer as many as we can. You may also use the chat function to provide comments and feedback during the session. Kindly note that this session is recorded. The speaker's presentation will be emailed to you and the recording will be available on the AICB member portal. If you have to leave the webinar session, please select Leave Meeting on the bottom right of your screen to do so. You can still rejoin the webinar session if it is still in progress. Now, to set the context, following on from our previous session on digital banking, Malaysian banks at a crossroads, where the discussion centered on the strategies adopted by financial institutions to compete and stay relevant in the banking and fintech landscape, we continue these discussions today with a focus on the fundamentals of electronic Know Your Customer eKYC, its benefits and implementation, the importance of recovery and resolution planning, and how it relates to risk management, key consideration when developing an exit plan. Without further ado, it gives me great pleasure to welcome our speakers for today, Dominic Chegne, Risk Assurance Services Partner, PwC Malaysia, and Ting Choo, Assurance Principal, PwC Malaysia, all of whom are experts in the area of digital banking risk strategies and implementation. May I please first invite Dominic to begin the session with his remarks and presentation. Take it away, Dominic.
Thanks, Prasad. Good morning, all, and trust everyone is well and safe. Thank you for joining the session today. Could I kindly move on to slide number 7, please? Yeah. So maybe just allow me to set the context quickly in terms of what I hope to share this morning. I'm not going to cover, very specifically the AML, CFT side of things. I think whether conventional, the types of channel that we adopt, right? I think AML risk needs to be managed. And I think really the focus I wanted to spend a bit more time today is more in the context of really what are the potential benefits surrounding eKYC. Right, and this is obviously in line with our own government's digital banking application. Now, eKYC, as you all know it, is not a new thing, right? It's been around, and what we really hope to do today is maybe expand on some of these existing literatures and see whether it kind of resonates with our own ambition at the end of the day, right? Now. Hong Kong has done it. I think they have 8 digital banking license. You have Taiwan, you have Singapore as well, right? And again, to be very specific about it, you talk about some successes in terms of stories out there. You will read of, I think UOB Bank in Thailand, right? They have fingerprint onboarding. You don't have to walk into the branch anymore. I remember reading about, I think, CIMB Philippines as well, right? I think they use liveness detection of facial kind of recognition platforms and so forth. And you read more about, these success stories in terms of how, institutions have kind of, implemented, eKYC platforms throughout their institution. Now, the focus today is not just about the virtual digital banking side of things, but also in terms of digitizing the existing services within the institution. Maybe it is also quite timely, right? Because of COVID, we talk about the concept of everything being remote, and suddenly that becomes a bit more important compared to anything else. Yeah. I will try to do a quick recap on, the Bank Negara eKYC requirements. And I'll kind of end it with, some of the design thinking from some of the experiences, we've kind of worked with our partners. All right. Now, can I move on to slide number 8, please? Now, some interesting insights just to start off the conversation and sharing today, right? And this is a study based on Jumio, right? And they are a mobile payment identity verification company. And this was, I think, a coverage within Asia Pac, and the study was conducted in 2019. I mean, you can get hold of some of this literature out there, yeah. Very interestingly, what kind of caught my attention was a few things. I think number one, if you look at really the first box, it talks about approximately maybe 60%, right, of consumer banking transactions in 2019, being done on mobile devices. Now, if you kind of supplement it further with, individuals like us, right, consumers, individuals, we own about maybe 3 to 4 devices, tablets, per consumer. And if you kind of supplement it further with about maybe, I think it's about 4.5 billion internet users out there right now globally. I mean, it's quite an interesting market potential to really think about, right? Now, box 2 and 3 kind of gives you a different perspective to things, and it tells you a different story. And this is coming more from a kind of user experience perspective. They talk about 50%, right, retail banking customers kind of abandoning their attempt, for new services because the onboarding process, via a branch is basically too cumbersome. The process is too long, and if you kind of extend that further, right, not only from going to a branch perspective, but in the context of really electronic kind of onboarding, it further kind of explains that even about 40% from online applications, right, kind of drop off halfway. Again, the context is about really the cumbersome part of the process, being very long and so forth. But there are success stories out there. It's not all that bad, right? I remember reading, I think in Philippines, right, in the past, maybe it'll take you about 60 minutes, right, to walk into a branch and open an account. But I think with the introduction of a lot of the electronic platforms, maybe it's about 1/6 of the time these days. And to kind of extrapolate that further, and this was a very interesting case that I read. I think this is CIMB Philippines as well, right? When they adopted, I think, some sort of eKYC platform, it was about maybe 10 to 15 minutes in terms of onboarding. And I think the other extreme is when they started kind of, introducing some sort of facial recognition, liveness kind of test platforms, right? It was less than 10 minutes. Again, many success stories out there. Now, I guess the good also kind of comes with the bad as well, right? I mean, some of the studies in here also kind of show that, I think approximately 4 out of the 5 banks who kind of introduce some level of real-time payment platforms has also resulted in, some fraud losses, right? I mean, there is an aspect of controls and security that comes into consideration that we need to think about. But we will touch on that topic on security, I think, in another session, right, to come. But just to share some experience on this, right, I mean, I have a team, we do eKYC platform testing prior launch, right? There were situations whereby, based on those kind of design thinking, the consideration of using selfie, as a verification element, we were able to, for example, use printed photos, use 3D kind of imprinted methods to kind of break the system. Again, it talks about really, the security of, those solutions and the verification, perspective that comes into mind. Yeah. Now, I mean, enough with the insights. Can I move on to maybe slide number 9 now? Now, if you really think about it, right, with all that being said and done, on the provision of some of these eKYC platforms or even digital services, I guess really from a layman perspective, the fundamental question that really comes to mind is that, what is really the confidence level that is required, for I guess service providers to undertake, right? To really prove that, Dominic is really Dominic at the end of the day, right? Now, if you really kind of contrast what, is showing on this slide between your identity today, in contrast with what we call, I guess, your future digital identity, your identity today is kind of represented via, your ID cards, your driving license, supplemented by, say, even your credit card, details or information, right? Now, if you kind of look at it from a digital realm perspective, we are talking about using, digital IDs. We are speaking of, leveraging of telco bank exchange information, the duties that they have done, even things like mobile authenticators, even to the extent of really using social internet accounts, right, to verify, who Dominic is at the end of the day, right? And then the questions that we really pose is really about, can I really prove that, the person, the user that's making the claim is really Dom, right? Do I even trust the organization and the process providing the claim? And is the information current, to begin with? And these are the questions that, we kind of pose in terms of really alluding to the identity verification at the end of the day. Now, obviously, the confidence level will differ depending on the use cases, and I'll share a bit more about that later on. Could I move on to slide number 10, please? Slide number 10, please. Now, just very quickly, maybe it's timely to speak about, or to share a bit about the Bank Negara, guideline on eKYC, right? I mean, there are many contents out there. I've kind of picked up the element on the authentication requirements bit. Yeah. Now, if you look at the standard, in the Bank Negara, speaks about a combination of authentication factors to consider. And if you kind of dwell into it further, it talks about 3 basic authentication factors, right? Number 1, really what the customer possess, the ID, what the customer knows, right? Your PIN number, your password, and lastly, what the customer is, your biometrics. Now, there are many measures out there, whether it is some sort of biometric technology, liveness detection technology, videos and so forth. Yeah. Now, I didn't put it in this slide, but it also talks about the Bank Negara's expectation in terms of the false acceptance rate, not exceeding basically 5% at the end of the day, right? If I recall, I think from Singapore perspective, more for their mobile operators, in terms of eKYC onboarding, I think it's 2%, right? And really, I guess, from Bank Negara's lens perspective, again, the question is, what is the level of confidence required? Yeah. Can I maybe move to page 11? Now, kind of bring it all together, right? In a very visual form of things, the ecosystem. Now, if I were just to ask all of you to maybe kind of focus on the top row first, right? That top row kind of represents your identity at the end of the day, right? Who you really claim to be. And if you focus on, the middle row, right? In terms of the authentication, the multi-factor authentication, right? It talks about really the multi-factor types of identity, steps that you may want to consider. Now, if you really kind of move your eyes, your lens from kind of left to right, I mean, the idea is really as you move your views, right, you're basically raising the confidence level to really prove that Dominic is Dominic at the end of the day. And that's really what we're trying to achieve, through the eKYC, platforms and concept. And I spoke about, the multiple use cases and confidence level differing depending on the use cases as well, right? I mean, I'm sure all of us, we use some sort of, mobile banking app, right? I mean, if you want to log into your app, password is required. That's the confidence level. And if you want to do a further transaction, transfer money, make payments, right? Some level of tech coding is required, followed or even by secure verification. And that's what we mean by, different level of confidence level depending on the use cases. All right. Now, can I move to slide number 12, please? Now, what I thought, will be kind of interesting, maybe just to share some of the design thinking, that we've undertook with our partners who've kind of embarked on this digital, eKYC services and onboarding. Yeah. Now, the cases are not primarily for digital banking, right? But I believe there is still a relevance to it. Okay. It talks about really the understanding, the need, how do you recognize what's the problem statement, leading on to the ideation process, and finally to, the implementation considerations. All right. Can I move to slide number 13, please? Now, just on case study number 1, and this is actually on a regional, crypto exchange that we kind of supported, partnered and worked with, right? Now, just going through the columns, right? I think in terms of really understanding the problem statement, the need, it was really about, finding a way to ease, onboarding, the convenient, the hassle-free type of things. But there's always a regulatory element to it to consider, right? That is secure, is supportable, is foolproof. And that's really the consolidated problem statement that we were looking at, right? How do you find something that's convenient yet, meet those requirements? Now, you would not only read in this regional case study, there are a lot of case studies out there whereby in terms of comparative advantage, the ability to leverage off, biometric databases, national registry. I think Bank Danamon in Indonesia has that link, if I'm not, if I recall correctly, right? And, in the case of this particular, partner that we work with, right, in the demographics we considered, right, I think crypto, much associated with the millennials, very much, there's a preference to use their mobile devices, smartphones, and a bit more comfortable in providing their personal data, right? And from a regulator's perspective, they wanted at least two-prong kind of controls to kind of substitute that face-to-face verification, right? And we all know that I think from a crypto product perspective, it is deemed a higher risk compared to other products. So from an implementation perspective, based on those problem statements, kind of resulted in, using, mobile video verification or some sort of biometric verification at the end of the day. Yeah. So that was really one of the thinkings behind it. Now, on page 14, a second case, this is a bit more generic, and it's kind of combination, of, whether it's the payment players, the e-payment players, the wallets that we've kind of worked with as well. Very similar case studies, right, or problem statement, looking for something whereby lightning speed registration, right, ease user experience. But you seem to gather, the respective data points. And if you look at the problem statement, very consistent with the one that I spoke about earlier on, right? Now, if you think about the ideation part of things, I think what kind of differentiates some of this element is really the ability whereby, remember I spoke about the leverage on telco, bank exchanges, right? And I think a lot of the platform these days has the tendency or the ability to do so, right? Meaning the verification of those identities via the telcos or via the bank exchanges, right? And when it comes to really the implementation side of things, the ability to verify, say, via your mobile tag code verification, right? And linking to your CASA accounts to say, to upload your wallet size and so forth, whereby the DUD has already been done by the banking sector. And I mean, these are the thinking, behind some of the cases that we've kind of worked on. Now, there are many other success stories out there, right? I mean, these are not the only ones. If you read, what's available, I mean, there are success stories about WeBank, right? I think that's a really interesting one. Different credit model rating that they adopt, right? I think the incumbent banks, when they talk about credit data, they use things like payments, amounts owed, credit utilization. But WeBank leverages off, the Tencent ecosystem, right? And now you're using social media activities, your online behavior, your spend to give you a credit rating and so forth. And there are many more that you read about the banks in Thailand, using, facial recognition, biometric, tools to onboard customers. Yeah. So I hope you found the 15 to 20 minutes interesting and insightful, right? Happy to share more later on in terms of the Q&A. And with that, that's really my sharing for this morning. I'm now going to pass this on to to Choo, who is going to touch on the RRP side of things. Over to you, Choo. Thank you.
Thank you very much, Dom, for your presentation. And good morning to everybody, and thanks for joining us on this webinar. What I'll do in the next 20 minutes is to give you all a brief introduction to recovery and ration planning. It's actually a very, I would say, relevant topic now because recovery and ration planning talks about situations in dire stress events, and COVID is actually a very clear example of it. And of course, how it also links up to the digital banking license applicants, yeah, because there's a requirement for an exit event, and how these three things all linked up together. So if I go to slide 16, why is this important, and what's the ultimate objective of having a recovery and ration planning? And the ends, I would say the big one is actually to avoid taxpayers, people like you and me, to bail out a bank. Okay, from history and from the lessons learned during the crisis in 1997 or even in 2009, right? In 2009, banks especially the large one, which we call them the systemic important banks, they can be too big to fail. If they fail, they will actually have dire consequences to the entire financial system, and that's where the government needs to step in. Okay, and the whole idea of recovery and ration planning is to break this, where the government doesn't need to step in, and if the bank needs to recover or resolve, it can be done safely. So that is the whole end game of why recovery and ration planning is so important. So if I move on to slide 17, this shows the evolution or how it all began and where we are now. It all started, as I mentioned, in 2008 when we actually have the financial crisis. Lehman Brothers, as you all know, a well-documented story, how it all collapsed and got itself bankrupt. And the government has to bail them out. Why? Because it's too big to fail. And at the point in time, the G20 has decided to set up the FSB board and then develop the RRP framework. As you can see, the recovery and ration planning framework has been around for almost more than 10 years. Yeah, I mean, and in 2010, US set up the Dodd-Frank Act, which actually gives more guidances and more rules to actually avoid the too big to fail situation. In 2011, FSB issued the key attributes, and that's where the first rules of the recovery and ration planning came about. And European American banks have been practicing it since then. Okay, on our side of the world, Hong Kong has issued the guidance in 2014. OJK, which is actually Indonesia, issued that in 2016 and close to 17. Singapore actually had the final guidance issued last year. And for Malaysia, we actually had an exposure draft issued in this quarter. But actually, Bank Negara has started this project way back in 2016 and 17. And as a matter of fact, they actually got a draft, exposure draft, but it's not actually published, and had 3 banks to perform the pilot in 2018. So we actually had started early, but only now, in the first quarter, we began to see the real rules as the exposure draft for comments. Now, move on to the next slide. Okay, it's also quite important to link how does it all connect. And the question I get most is, we already have so many rules, and the banks has Basel, all the capital requirements and all. So what does this recovery planning does, and is it just compliance, or does it add on to something? And the rationale is quite clear. Yeah, it is not a compliance exercise. It's actually meant to be a continuous of the existing risk management practices. From this slide, you can see the current ongoing risk management practice that you have right now manages risk based on business as usual and based on current situation. Yeah? And you will actually have all those various rules, stress testings that actually provide guidances to this. Recovery planning addresses not BAU risk, it's actually on acute crisis risk, means near default event. So you actually moved the crisis situation escalates much further. Okay, and that's where the recovery planning comes in. And if you can't recover itself, then you move to restitution planning. The difference between recovery planning and restitution planning is 2 very clear distinction. 1, recovery planning is done by the bank themselves. It means they have to prepare for a near default crisis event. If you can't recover based on what you have planned out, then technically the bank or the FI will be in default. And when they're in default, the restitution authorities take over. So restitution planning is done by the restitution authorities in Malaysia. And for in Malaysia, the restitution authorities is actually PIDM. So that's how these whole 3 things link up together. And sorry, and I would like to re-emphasize, it's quite clear from the regulator's point of view, recovery planning is not a compliance exercise. It's actually an extension of existing risk management practices. Okay, we'll move on to the next slide. This is just to give a very brief overview of what is inside a recovery plan. You can actually read the details in the exposure draft, and also there's a reference link right at the bottom there where we can actually have our PwC top leadership materials on recovery planning. It's actually quite technical, so I won't go through in depth. But in summary, the exposure draft, or what you need to do is the bank will need to actually develop a recovery plan. It comprises of all these main chapters. And there's certain few things that the bank needs to identify. Number 1, later I'll also elaborate this concept, is the concept of critical functions. The bank will need to identify what kind of services business they have, which is actually extremely critical to the market surrounding them. Meaning the fact that these things need to survive. If the bank needs to go down, it's going down, this critical function must survive because it's very important to the external market. Okay, so that is one of the key things in which they need to identify right at the onset. And second, it's the need to actually have a preferred recovery option. That is the end game of the entire recovery plan, a preferred recovery option. And this preferred recovery option need to survive multiple severe crisis near default events. And you can see in this wheel in chapter 6, something called scenario analysis. This tests the whole recovery option that you have and the process that you actually made surrounding it. And this is not as simple as it looks, because in the guidance, you need to be very credible. So Bank Negara actually looks at your recovery options that you have set up, the processes that you put in place, and whether all these things that you actually have done stands the hypothetical testing of scenario analysis. And this scenario analysis, depending on the complexity of the bank, can be as many as 6. You can actually have idiosyncratic, you can actually have a market-wide, a mix of idiosyncratic and market-wide, and fast-moving and slow-moving. So there are multiple scenarios for the test, and it all has to be in a near default event situation. So, and the other few things that you need to put in very clearly, it's the processes of the bank has to change. Meaning the fact that you need to actually set up proper committees to escalate whenever a recovery indicator is hit. The bank needs to actually monitor certain indicators, and the elements as already prescribed in the draft, where if you hit the indicators, then you need to actually escalate the options. So all those things, SOPs, processes, board mandate committees, and will need to change arising from this recovery plan action. Now, if I move on to the next slide, slide 20. Now, give a brief about resolution planning. Yeah. Now, just to have a recap, this is actually done by PIDM, but it's actually quite important to know what they are asking. Okay, and in resolution planning, the PIDM or the resolution authorities will always ask data from the bank. And so that's the responsibility of the bank. It's actually to provide data to the resolution authorities for them to actually do their planning. And there are lots and lots of data that you need to provide. Currently, right now, PIDM has not announced their framework yet, but it's going to come soon. But what I'll do now is just to give an overall view of what goes around when they do their resolution planning. The diagram that you see in front of you is actually from the single resolution board. Most resolution planning evolves around the same general principles. The first idea is actually to analyze the bank's critical functions. That means what are your CF? In my earlier slides now, I mentioned critical functions. And why is it so important? It's because the whole idea is when the bank goes down, they want to resolve the bank safely. And safely means to actually have the lowest risk to the financial system. And critical functions are the functions in which, if it's not there, there will be disruption to the financial system. So identification of the critical functions is utmost important, and that's the first step. And then once that is done, then the regional authorities will then assess to see what is the best way to resolve the bank. If they can actually round you guys up, if they say, for example, you have no critical functions, then you can just go to a normal insolvency proceedings, quite simple and straightforward. But if you do have it, then they'll need to actually identify the best strategy to resolve the bank. Yeah, and there are quite a couple of tools to use: sale of business, bridge institutions, asset separation. It's just like a normal way of you trying to wind down a company, but the only complication, as I mentioned, is certain critical functions in the company, if you have, needs to be there to operate continually. Yeah, so the strategy could be different. We don't have internationally. We actually do have a built-in element, but for Malaysia, we have not have this yet. The regulators still need to decide on whether can a built-in mechanics works or not. Yeah. And another key important element when the Russian authorities were to actually come out with a Russian resolution strategy is the strategy needs to be at the least cost to the financial system. And that is also a very key factor. So what the Russian authority will do, they will have multiple possible scenarios using multiple possible tools, and they'll compute the cost of each of these strategy and options to the financial systems. Yeah, and they will probably choose the one that is actually having the least cost. And finally, of course, the most important element is that the critical functions must continuously operate throughout the period. Yeah, so that is what an overview of a Russian planning process will be like. If I move on to the next slide, and this is just trying to link it up to the digital banking license requirement. The exposure draft to apply for digital banking license is already out, and in the exposure draft, there is a requirement for an exit plan. Yeah, and of course, in the exposure draft, the draw references to say that if you want to know how to actually write an exit plan, please refer to the recovery planning ED. Why an exit plan is quite, I think the rationale is because currently the digital banking license applicant is actually meant for a period of the 5 years. This is the first 5 probational years where there is limitation in the way you can handle the business. And due to the fact that digital banking is actually quite, shall I say, new, you're allowed to actually use new methods to do business. It's actually quite experimental. So Bank Negara is playing it safe. And that's why they actually had a 5 years probation requirement. And if your business is not sustainable, then of course they want to make sure the fact that you can exit properly with the least disruption to the financial system and this convenient and this inconvenience to the customers. So that is the reason why the exit plan is a requirement there. And of course, things that you need to put into the exit plan is, number one, you need to know what are the triggers. That means, let's say, for example, if to know when you think that the business is not sustainable and when you need to exit. Okay, so that's important to actually lay out in front. And the options that you need to do. That means technically, if you want to exit, how are you going to exit? So those 2 things are very key to be submitted in the exit plan at the license application. Yeah. Of course, if you are successful in it, the exit plan needs to be further elaborated to be almost like a recovery plan, where you will need to actually put in the governance structure and the commission strategy and things like that. So it almost it's in some ways a mixture of both a recovery plan and a resolution plan. Yeah. So that sums up about what the digital banking license exit plan requirement is. And I'm happy to actually, and thank you for listening. My presentation is short, but I would like to actually answer more questions if you have. Thanks, and I'll pass back to Prasad.
Thank you, Dominic and Choo, for your insights. You've given us a lot of food for thought. I also want to apologize in my introduction. Choo is actually the partner of Risk Assurance Services rather than the assurance principal. My apologies again. Everyone, you'll see a QR code on the screen now. We would be grateful if you could use your phones to scan the code and complete the survey to get your CPD points while we now move on to take some questions. There are several comments and questions on the topics. If I may start with Choo first. Choo, will digital banks require the same level of detail for recovery planning, do you think?
Okay, it will. It depends. If for digital banking, actually, we're talking about the two levels. For the application, it will be in less detail because at this point in time, you have not started your business yet, right? So you are just going to lay down what your exit triggers will be, and of course, what are your options to exit. But the moment you actually are involved and you have a license, then the depth can be the same, right? Because you have to elaborate how your processes are and what you have put in place, the board committees and all. So those things are quite extensive. Yeah. But of course, for digital banking, because the size of your operation is limited, it's smaller. So by virtue of that, obviously, I would expect it to be less complex compared to a normal commercial bank. Yeah, because of a normal commercial bank, just to give you an idea, the recovery plan is actually quite a complex document. In order for you to actually develop the recovery plan, it actually involves the whole bank. It involves all the people in every division. Actually, in fact, one of the pilot bank submission, I think I mentioned up in the Edge article as well, can be a 1,000-pager. So it's actually quite an elaborative and comprehensive document.
So that's even for the digital banks, right?
Yeah. Well, I mean, and because of the fact that the recovery plan actually is meant to cover the entire banking group. So if you are a bank in which you have branches or even subsidiaries overseas in Indonesia, it actually covers them as well. So obviously the complexity is much more, and you have the more business lines you have, the more complex your recovery plan will be. So if you're digital banking, if your banking assets and your banking business is smaller, then it will be less complex as compared to the recovery plan for normal commercial bank.
Right. Since I have you as well, with these recovery plans, etc., what is the acceptable time frame for executing these recovery plans, basically? Given the fact that the digital world moves so fast, there's been some wonderment about whether, how fast we have to do this.
Okay, doing in a sense that executing the recovery plan or preparing the recovery plan. So that I'll answer you in two ways, Prasad. Right now, to develop a recovery plan, depending on the resources and the shall I say the commitment that you have, because most banks right now they actually have people, but everyone is still have their full day jobs, and the recovery planning seems to be like a side job that you need to do. So on average, I would say if you put the correct amount of resources in, it will take you around 3 to 6 months to prepare a good recovery plan. 3 to 6 months, okay? And bear in mind the fact that the recovery plan needs to be credible. Now, how fast that you need to activate the recovery actions, that will be because in your recovery plan, remember the wheel that I showed, there are certain indicators that actually shows you when you need to actually invoke your actions. Okay, so and that all depends on what your options are. Let's say, for example, if you are in dire stress, you hit a near default event. But if you have good options, let's say, for example, you have a very wealthy shareholder that can pump in capital at any point in time, then you can actually invoke it quite fast and you can actually go back quite quickly. But if you don't have that, you have limited options, then your recovery period could be longer.
So we do have a question about, business slowing for the banks and so on and so forth, and with perhaps severance and stuff coming out. I just wanted to check, that's not part of recovery and resolution, right? That is basically, a recovery and resolution is essentially a living will for the banks,
Yes.
i.e. what you do when you die.
Well, not really. Okay, recovery is what you do before you die. Resolution is what you do when you die, right? Okay, so the severance packages, actually it depends. It could be because the bank needs to do something to survive, and if cost is actually a factor,
Right.
cost is a factor, so you actually need to reduce costs. So it's either you reduce revenue, you get rid of your bad assets, or you reduce costs. So it may be depending on the bank.
Gotcha. But if we can move on to Dominic now, there are a whole host of specific questions, but Dominic, what are some of the benefits operationally that you have seen from institutions embarking on eKYC, basically?
Okay, thanks, Prasad, for the question. I think there are, I guess, a few examples or dimensions that we can consider. I mean, in terms of what we define as so-called measures of benefits, right? I mean, the first one that comes to mind, and I think I shared about this earlier, the whole idea of, the user experience, right? The ability to shorten onboarding time, right? From, an hour to mere minutes. I think that is something to reckon with. I mean, I'm a user as well at the end of the day, right? I mean, I hate filling up forms, right? Anything to ease my pain. I mean, I love the idea behind it. And you would see, right, from the CIMB Philippines, the context that I shared, I think even in Danamon Bank in Indonesia, they spoke about 20 minutes, right, onboarding and the ability to link to the National Registry of Indonesia, right? And I think these are some of the benefits that we can actually consider operationally, that what comes to mind, yeah.
And Dominic, we do have a question asking about, once you implemented some of these good multi-factor authentications and so on and so forth, what risks are residual that you see, basically, that need to be addressed?
Now, I mean, I do not claim to be an RMIT expert, right? But obviously, I think in the context of implementing any platforms, you need to bring the RMIT kind of consideration into place in terms of security, controls, and so forth. And if you follow, the RMIT guidance, it speaks about, the implementation considerations, right? What are your safeguards? How do you secure them, and how do you test them? And I think there's no difference, irrespective of whether it is an eKYC platform to other systems that you are going to implement within your institution, right? I think the technology RMIT system development lifecycle aspect has to come into play as well, right? And I think certain conditions you would require some independent assessment to that. I mean, another aspect that I can kind of think of, and maybe this is a bit more specific in nature, right? I know I wasn't supposed to speak about AML, CFT risks, right? But just to touch on that context. Now, there are literature out there that talks about, implementing a really decent system, a very decent integrated eKYC system, and the ability to help really manage the whole realm of, money laundering risks. Yeah. I think I remember reading about, was it OCBC or UOB, trying to recall, right? And they were able to kind of, from a transaction monitoring reviewing case perspective, by adopting a very robust kind of eKYC platform, the ability to gather those information, right, at the end of the day, it reduced, the volume by about 30 to 40%, right? And not only that, right? I think interestingly, accuracy rate was 4 times better. So there are benefits, tying how the whole ecosystem from onboarding to ongoing due diligence to transaction monitoring at the end of the day. And that's how I kind of look at the residual risk of things, Prasad. Yeah.
Right. Well, we have a couple of questions on, governments being the primary trusted party for IDV through the ID, so on and so forth. Is it the best route, like India with Aadhaar and stuff like that? What are the obstacles to us implementing something like that here? And also, does current banking eKYC link to these registries? Is that also an issue, basically, given
Now,
governments?
now that's a tough one to answer, right?
We have the platform already, you know what I mean?
Correct. We do have the platform now. I think the unfortunate part is, I always find that the intent is great, right? Now, if we learn from our neighboring countries or even what's happening around the world, right? I think Sweden was the first one that started into the whole digital, identity, right? And if you think about really what they were trying to achieve, a couple of the banks coming together, and that was early 2000, if I'm trying to recall correctly, right? Giving everyone an identity, and then leading on to that, even the government officers were tying to that platform. And if I recall correctly, I think about 80% of population in Sweden actually writes on that platform. That's the positive side of things. Now, unfortunately, there has been some unfortunate cases as well, right? And we're referring to the Aadhaar case in India, whereby now reading into that particular case, right? Okay, I don't know the details, right? The devil behind the details, but I get from a wider sense of things. When it was started, the whole problem statement was about being able to reach and provide welfare to the masses. Right, that was really the problem statement that they were trying to solve. But along the way, right, whether it's via the implementation process of things, right, they weren't able to kind of register everyone, and as a result, from an application perspective, the people who deserve the welfare wasn't getting it at the end of the day. And I think it was also kind of supplemented by the fact that there were some leakages as well, right? And so forth. And as a result, I think it was kind of terminated in terms of the program at the end of the day, right? So again, you see two spectrum of stories, right? One spectrum whereby it was done quite well, there are successes and people are riding on it, and to the other spectrum whereby it didn't do too well, right? For me, I guess I believe that if you really want to do this well, I think the whole ecosystem needs to come together. And again, I'm drawing reference to say Danamon Bank, right, in Indonesia, whereby they draw reference to the national registry. And I guess that's my view to it, Prasad.
Gotcha. Coming back to Chuai, we have a question saying that referring to case studies of digital bank cutover failures like TSB in the UK and so on and so forth, and how that was handled. Do you see these embedded in the recovery and resolution planning at the moment, or?
Yeah, well, one of the I would say the challenges of digital bank when compared to a commercial bank, it's everything will be slightly different. It's experimental. Number one.
Right.
Yep. And number two, it's if you can't recover, means you need to sell your business, and then that's what the exit plan requires. You need to sell to someone, and you need to actually sell to someone who can actually consume the way you operate, which is actually very different from a commercial bank. So there are limitations involved. And of course, another very big important question about resolution of recovery digital bank. It's are your depositors protected by PIDM? That's also another thing which I think is not being covered right now in the exposure draft. So that is still I find a question mark, and that actually has some things in which I think the regulators need to work out for. Yeah.
So out of interest, have there been any recovery plans put into action in this part of the world, or in fact, in any part of the world, actually?
Of course.
Lehman's?
Actually, well, Lehman is a bit too late because Lehman went down before the recovery plan guidance are there.
Right.
Actually, a lot of the European banks are actually under recovery mode. Let's say, for example, if I can say, I think if I'm not mistaken, Deutsche Bank was under recovery mode, and it's because in the European banks, their capital, I would say, threshold is actually quite thin. It's not like us. Malaysian banks are actually very well capitalized, so we feel a bit safer. As a matter of fact, when you discuss with the banks, they feel that they're overcapitalized, and the situation or the event that can actually cause them to go down is actually quite drastic. But if you look at the European banks, it's slightly different. Any change in market can actually put the capital under such stress that they will be in recovery mode. So.
But there's been no such thing in the region, though, has there really?
Okay, region there is. Let's say, for example, in Indonesia, you actually have bank failures almost every year, 3-4 banks failures.
Oh, really?
Yes. Which is why I think the OJK came out with their recovery planning guidelines and resolution much faster than Malaysia. We are fortunate in one way is because Bank Negara has the foresight to actually consolidate the banks. I mean, Indonesia have a few thousand banks. Okay,
meaning we're over-regulated as well.
I wouldn't say that. I won't say we're over-regulated. We just say that Bank Negara have been playing it safe.
No, absolutely. This is generally to both you and Dom, basically. We have a person asking if you could share your views of the existing technology within Malaysia or even a region which is mature enough to support organization to get up the digitalization trend, as well as to mitigate financial crime, compliance risks. And same goes for a recovery plan. If the existing talent are able to provide sufficient support to organization. So it's a double part technology and talent, basically.
Okay.
Either one of you.
Maybe let me go first. Let me go first. Yeah. And maybe something to be proud of within this region, right? I was actually talking to my counterparts in North America last night, right? And again, I was just trying to get a bit more insights, in terms of, from a North America perspective, right? What are the developments there? With regards to eKYC, financial crime management and everything, right? Now, to my surprise, and I think this is something we should be proud of, I know he was saying that, Dom, you'd be surprised that actually, the Asia Pac or the Asia part of the world, right? We are actually a bit more progressive compared to North America, right? Now, if you talk about really technology and talent, right? Maybe instead of looking outwards, we should kind of consider looking inwards, right? And I mean, if you tie back to a lot of the success stories that I've read, and these are basically readily available literature out there, right? A lot of the cases are actually within our region, right? I mean, if I go back to the previous question a moment ago, Prasad, in terms of national identity, right? I mean, I know we spoke about the Aadhaar case. You can also make reference to the Singapore contrasting part of it in terms of my info as well, and how they've kind of implemented it, right? So, I mean, I guess treading carefully in terms of answering the question, I would suggest that actually a lot of the talent are in Malay. I mean, are within the region. A lot of cases out there, whether it is Thailand, it is Philippines, the central banks, are pushing it a bit harder, right? A bit more, and that's really how I see it.
Choo, do you see?
Choo?
Yeah, well, actually, I do agree with Dom. I think the talents are there. And as we talk about the digital world, right? And I think the Malaysia digital talent is actually quite good. I mean, you look at we were involved in creative multimedia stuff like that, and we do have a lot of things that's actually been done quite well in this part of the world. So, and I'm actually quite glad that BNM is actually exploring and allowing this to happen, and allowing that 5 years probation period to allow creativity, and see what you can do in a safer environment. Yeah. And if you looked at the statistics in terms of adoption of digital tools and usage of social media, Malaysia actually tops this part of the world. And due to that, I feel it can be quite a good area for us.
Do both of you see, for the amount of information one has to give up to a certain extent to require authentication, do you see privacy issues, and how are Malaysians, are they particularly concerned about these things, or, what have you seen in that, in terms of privacy, basically?
Well, I'll respond to that. Privacy is something which I feel it's actually something I won't say it's new. It's actually, the concern is getting higher. It's not only in this part of the world. It's actually, the moment we go digital, we put all our information in Facebook, in all around. Yeah. So that I feel, yes, it's important. Yes, there's concern, but I feel that it's something that which we can address, and I strongly believe the fact that the information that we provide is actually being guarded safely in some ways, and we provide only certain information that we feel we want to share. Yeah.
Right. Dominic, one for you. We have a question here, mentioning that there have been news reports banks have been buying eKYC solutions off the shelf. Are they allowed to implement them without BNM approval, especially when it's still under exposure draft? And apparently there are also digital card issuers who use eKYC to onboard customers. Is this governed by BNM? Anything you can shed light there is appreciated.
Yeah, I think there's two aspects to this, right? I think a lot of the guidance, I think prior to the eKYC guideline, I think they were following back the remittance guidelines, or the other one, I can't recall, but the remittance side of things, right? Now, a lot of this implementation for remittance partners also ties back to things like the RMIT and so forth, and I think that's how the institutions went about it, right? So again, you have to fall back to the RMIT, and I can't be too certain, to be very honest about it, I can't be too certain in terms of the RMIT specific requirements. Now, but digitizing services, as I mentioned, is not a new thing, right? Now, I'm just going through some of the questions. I think there was one question earlier, right? I may have missed, was on about, what's zero authentication to continuous authentication and step up. Now, let me maybe try to break it down, right? Now, again, it depends on really the use cases at the end of the day, right? If I look at from a zero authentication perspective, a lot of times the concept is about cross-selling, whereby you've onboarded someone, say, via a CASA element. And if you want to say cross-sell a unit trust, maybe the authentication is lesser, right? Very similarly, if you think about a gradual level of confidence level required, even via your mobile app, I use a few things, right? I use Hong Leong Connect, I use CIMB Clicks, I use Maybank to you, right? Now, if you look at your phone, if you just sign on, your name is registered, right? They recognize who you are as part of the phone identification. But if you want to do, say, for example, a do it now or a transfer, right? Again, a step-up verification is required, right? Whether it's via a password, a PIN, or some sort of biometric, test. And that's what we kind of mean by, from a zero to a step up to a continuous authentication kind of thinking and concept behind it.
Right. Choo, we have a question here, about, in any recovery and resolution scenario, has PIDM got the bandwidth, basically? It's basically, do they have sufficient reserves that they've built up, so on and so forth? But I mean, that's a hard
Okay.
question to answer as well, because it's, well, political, and as well as the fact that the ecosystem is so large that, one affects
Yeah.
the other.
Yeah. Well, they do have some reserves. I think their reserves are announced. But of course, the reserves that PIDM has is actually meant to pay off depositors, and the depositors' money is actually limited to a certain amount, right? It's not like you put in all amount money, you get back all. There's a cap to it, number one. And number two, in a resolution strategy, paying off depositors is not really the most ideal situation. I mean, what they were trying to do most of the time is to find a buyer for the bank, okay, and see who can take over that services. Okay. So whoever take over the services will take over the customers as well now. So paying off depositors, I find it seems to be not the most preferred strategy, because what it means is it's because at the end of the day, the customer will still need to be in banking anyway. You still need to actually put your money somewhere, right? Yeah. So it's most likely the fact that they will try to find another buyer of the bank and actually recapitalize it through some other means. Yeah.
Right.
But to answer the question, if all the banks in the entire Malaysia goes down, I don't think, of course, they can't pay off everyone. That's not possible, right? But that most likely will be a likely scenario.
But we don't have any GSIBs, do we? Global systemically important banks. But we have our DSIBs, and
That's right.
in your opinion, are we well prepared to, avoiding the use of taxpayer money in a bailout scenario?
We are well prepared. Actually, number one, I think we are moving into the right step. Okay, if we fully adopt the recovery planning and resolution planning, then we are. So we are now moving towards that step to actually avoid a too big to fail. Yeah.
Right.
Yeah.
Okay.
And the exposure draft is already out this year, and the moment we start implementing it, then we will be better prepared for it.
Okay. And, just to ask the question on this whole recovery thing, given that we are in a situation right now whereby post-moratorium, we'll start to see, if there are any issues, are they also asked to prepare for those situations? For instance, I mean, really, what I really want to ask is, were pandemics considered in any sort of scenario like this?
Okay, yes, it could. I think no one actually foresee a pandemic. But the funny thing is this: now you'll be surprised. The pandemic right now that we face in Malaysia may not be severe enough to actually put certain banks into a recovery mode. That is the because of the fact that we are actually quite well capitalized.
Right.
That's what I understand for some of the banks. And when you go through a recovery planning exercise, you think about, and this is something that's quite I would say interesting. You think about a situation, right, on an event that can bring down the largest bank in Malaysia. Okay, just think about it, and knowing the fact that they're actually quite well capitalized, well over more than 15-16%. So that additional 8% reduction in capital actually tends to amount to quite a big amount of loss, a very huge amount of loss. And I think some banks actually do struggle to think about what event would that be.
Well,
Yeah.
one final question. One final question for Dominic. We hear much about our fintech ecosystem and stuff like that. Do you see them being able to cater for eKYC, so on and so forth?
Sorry,
Banks?
Prasad, I couldn't quite hear you. The line was kind of bad. Sorry, I missed the question.
Sorry, yes. Given we've heard a lot about our fintech ecosystem here in Malaysia, do we have fintechs here that can actually cater for these things like eKYC, so on and so forth?
Yes, I think they are service providers, right? I think I mentioned earlier, we had a team, but this was more on the remittance side of things, right? Certain parts of ours, going through that that thought process, whether it's from an e-payment or wallet perspective. And there are service providers. I mean, it goes back to the question of the talent and the service providers in Malaysia, right? I mean, I'm not going to quote names, right? But I mean, they are, I mean, they are existing talent that we've worked with. And that's a plus sign.
Dominic, how do you, convincing people to get on board with this way as opposed to using forms and stuff like that? How do we increase customer confidence, given that they hear a lot about hacking and so on and so forth? Alternatively, I think, it's a case of there are very few crashes airlines-wise in a year. When it happens, it's spectacular. So how do we get beyond in terms of allowing people to go through this, et cetera, basically? I mean, just to think about it, I just wanted to say, in China, there's a level of trust with the government, or not, as the case may be, that's already there.
I hear you. I don't think there is a perfect answer to this. I mean, if you really ask my personal view, right, there are multiple facets to it. I think there are, a very tangible component and a very intangible component to really building trust. Now, to kind of expand upon that, right, we spoke about, data privacy, right? Number one, I mean, rhetorical questions. How much do we believe in our data privacy laws in Malaysia, as an example, right? Number one, I mean, how much do you believe in your data privacy processes within your organization, and so forth? Now, on a very intangible component, we spoke about, from a behavioral dimension, right? Do you trust giving 6 data points to your e-wallet, when you sign up, as an example, right? Again, it's a matter of trust. And before you give trust, you want to establish that, within that entity, they have done they are required to kind of make sure that the system is so-called foolproof, right? And your data is guarded, whether you adopt cloud. And if you kind of expand upon it further, right, there are so-called cloud requirements in terms of, security and so forth, right? So it's really an ecosystem realm of things. And that's how I kind of see it, right? I mean, we spoke about tying back to the National Registry, how much you trust in that, right? We've also heard about, failure of cases and so forth. So, I mean, for me, I think number one, really being very clear, really what's the problem statement that you're really trying to solve at the end of the day, right? I think I'm a big believer in that. So if really we are moving towards, a position or marker whereby, we really want to strive upon, I guess, digital realm of things, right? All this needs to be put in place, right? It's an ecosystem at the end of the day. And that's how I kind of view it, Prasad.
Choo, one last question. I just wanted to check with you. The Fed and the Bank of England, we've heard, the ECB have stress tests, right?
Yes.
Do we have them, and are they part of the whole RRP process, so on and so forth?
Well, we do have stress tests. The stress test is part of the normal risk appetite framework requirement. Yeah. Whereas for the recovery planning, I won't call it a stress test. It's called a scenario analysis.
Right.
It's slightly different. Yeah, because a stress test is actually quite static. You actually impose, like, the market goes down by 10%. What's your impact? And that's what you do. But for scenario analysis, it's almost like a reverse stress testing kind of situation, which Ben guys is introduced. Think of an event that actually puts you at near default. Number one, okay. So you have to think about that. What are the impacts for that situation to your bank's financials and all the elements that you actually have to measure recovery. And three, and that's the part in which is completely different from stress tests, for the recovery planning. I just want to emphasize that point because there's a lot of confusion over, I do stress tests and then I have this, so what is really the difference? And right. You actually need to put in the impact of your recovery options throughout the period of time and see whether that actually measures enough. Yeah? If you can't, you have to rethink your whole strategy again one more time. So just answer your question. the stress test is already there in the current risk appetite framework requirement. Okay, so recovery planning actually extends much further than that.
Okay, on that note, we've reached the end of our session. On behalf of everyone here, I'd like to thank Dominic and Choo again for taking the valuable time to prep and share with us your insights. Thank you as well to all who attended and engaged with us. We hope you have enjoyed the discussions today. We do apologize that we are unable to accommodate everyone who had questions for the speakers due to the time constraints. But before we go, I'd like to reiterate that in the current climate where many are working from home, it's important to continue honing your existing skill set and knowledge as you move into a new uncertain future. There are many online programs and courses available, so please feel free to reach out to us if you need assistance in your professional development. On another note, I'd like to let you know that our next session on accelerating digital workforce transformation in financial services will be held on the 1st of July. This webinar with Jasmine Peters, Director, Experience Consulting Lead at PwC, Wansek Lim, Director, People and Organization at PwC, and Dr. Munara Manaf, of Group Chief Human Capital Officer of Maybank, will be joining us as speakers in the ongoing AICB PwC Digital Banking Series. Following that webinar, we'll be hosting the Digital Banking Technology webinar on the 15th of July, where Clarence Chan, Executive Director, Sharon of PwC, Sharon Ismail, Consulting Partner, both of PwC Malaysia, and Rohan Krishnalingam, Chief Digital and Technology Officer, RHB, will provide us with an overview of technology architecture and practices. Now, please note that these dates may be subject to change, so please continue to check our website. But before you go, do participate in the webinar survey, which you may access via the QR code on the screen now. And please give us feedback by completing the survey to obtain your CPD points. Once again, everyone, thank you. Stay safe, and do visit our website at www.aicb.org.my for any updates on our upcoming webinars again. Thank you. Stay safe and healthy. Bye all.
Thank you so much. Bye-bye.